Hello traders, welcome to your technical market update for Tuesday the 10th of March 2015, and we are headed into another quiet market session. Like yesterday, we don't have a lot of data on the economic calendar, which means that we don't have a lot of risk for trends to completely change, and the trends are very strong. We are seeing the strong trends due to very significant divergences in economies. The strong economies are getting stronger, such as the US, and the weak economies are getting weaker, such as the Australian. And the currencies are definitely pricing this in. It became a blunt and brutal reality on Friday after the non-farm payrolls, and the market's now pricing it in. I've been mentioning in the fundamental videos recently how the market hasn't really been reacting as per the fundamentals, and then now all of a sudden it's starting to catch up and there's plenty of money to be made. Now, I've got it on the Great British Pound chart to kick things off, and we're on the weekly chart, and that's because tonight we have Governor Carney coming out and speaking. This is the only piece of data coming out tonight that can potentially have an altering impact on a currency pair in terms of changing the trend. Now, we're on the weekly chart, and as you can see, we are headed into a very significant support level. Now, it's a support level here. If I zoom out, you'll see it was support over here. If I zoom out even further, you'll see back in 2010, and we had a bit of price action there, and then a little bit of price action. It was keeping the market underwater or under this profit line here at 2008 in the GFC. Now, if we break this line, this is a significant level that it keeps bouncing off, and it's bouncing off and bouncing off for many years. We're into our 7th year of bouncing off this line and not really going below for long. And if we break it and significantly break it, we could actually continue our falls. Now, on a fundamental basis, the pound shouldn't be coming under quite the amount of pressure that it has come under. Now, this move here is quite significant. I'll zoom in a little bit because it's probably hard to see. And then we've got this move here. Now, this move going up is when they started indicating that they're going to look to raise rates. And they kept talking about it and talking about it and talking about it and talking about it. We got to the peak and they said, look, we're not going to do it because the global situation isn't quite good enough for us to do it. So we're not looking to do it. And then the market has brought it all the way back down to where it started. So that's the fundamental analysis behind it all. So now we're back to where we started, and the market is going to look for direction. Well, what are we going to do? Because they have started indicating again that they will raise rates this year, but they haven't put a time frame on it. They said that they're still flexible, and they said they're still open. Now, if Governor Carney comes out tonight and says that they are going to do it this year and potentially gives an indication of what quarter this year, third quarter, fourth quarter, they're looking to raise rates, we could get a bounce off this level once again. But if he indicates that they are potentially going to raise rates at all this year, well, that could be the piece of data that the market needs to break this level and significantly chase some lows. Of course, we could get some false breakouts like this, and we need to see what happens in coming weeks, but it's just a bit of a important point of junction where the market's going to look for some sort of indication on where we're going to go. Now, that's the only thing that can happen, and if I zoom in, we're on the daily chart. We had a little bit of a bounce, as you can see, yesterday, and then we've come off a little bit. And we had support here off $1.50 as well, and we need to really get down sort of well below it down here before we can say it's truly broken and potentially it's done and dusted and we're going to continue to slide. But it's all going to be on the back of the fundamentals. So it's important to watch the announcement, follow the data, and I'll tell you all about it tomorrow anyway. So that's just something that I want you to watch. Now, we need to put in a few scenarios on what could potentially happen and figure out some trading opportunities. So let's have a look. Let's take this opportunity while the markets are quiet to look at how we've pieced together some trades. Now, the Australian dollar is very weak right now, and gold's falling, their economy's getting worse, unemployment's getting worse, wages aren't growing, we've got a housing bubble potentially shaping up, and other than that, everything else doesn't look real good. So being the weak economy, the pound would trade very good against that should Carney indicate that they're going to raise rates and the pound get a rally tonight. So let's look at see is there a trade potential here on the Great British Pound Australian dollar. Now the Australian dollar should continue to get weaker against the pound as we've seen happen, but this could actually accelerate because The pound's been falling, don't forget, against the US, and the Australian dollar's been falling against the US. But when you bring the two together, everybody knows that the UK economy is outperforming the Australian. But this could actually intensify if they start giving indications on when they're going to look to raise rates. That means that this high could get taken out and definitely a run to $1.98. So there's a trading potential there that if the news comes out positive and Carney starts indicating, you could trade the breakout of this and also the run to that and start adding positions. I wouldn't be taking profit on one of the positions, and I'll be letting it run and then keep scalping on the way up. This is just my personal opinions and my personal methods of trading. Of course, there's more than one way to skin a cat. Now, this is the daily chart, and as you can see, we had a big rally here, and let me just get rid of some lines I was just fiddling around with. And then we had a bit of a pullback. This is a standard pullback. This isn't for any fundamental reasons. The market's having a bit of a breather, and you could say that it's had a rally, it's had a pullback, it's bouncing off support, which is old resistance, and it just happens to be a Fibonacci level as well. I won't pull a fib and just take my word for it. So this could be a swing trade on a long-term scale where two diverging economies are getting further and further apart should Carney indicate an interest rate rise, and while Australia is actually contemplating another interest rate cut. So this is how you piece together some long-term trades. All right, so that's a particular trade that you could do. And of course you can trade the Australian dollar versus the US, and we could get a bounce. This is a rally, we've got a bit of a pullback. Now, let's say that he was to come out positive, support will be in this area here, and we could see extension levels back to the non-farm payroll resistance levels, and we could get a rally up into here. Now, if he doesn't come out and say that, the previous trade on the Australian dollar will potentially become null and void for a little while, and we could have a little bit of a pullback on that and get a better entry at a later date because the economies are still diverging. That hasn't changed, that won't change. Not for a long time anyway. But then we could trade the breakout of this low that we've just established in the Asian session. And we could just make some money of it going lower and coming back down and testing. I'd be getting out before the $1.50 because as we've seen, the market seems to get a little skittish around the $1.50. So I'll just take some money in this area here. So there's two trading opportunities for you and how I piece them together and how I get the methodology behind them. So there's that for you tonight. Now, there's not a lot of other data, but I'll go through quickly, as I always do, just the major charts and chat to you about what's happened. And we can look on a longer term scale because the trends and the other charts, I don't believe, have any potential of changing, not tonight anyway, because we don't have any significant data. If I go to the New Zealand on the weekly, as you can see, we're in a downtrend here. This is a weekly chart. We've had a fall. We had come up, found resistance, fell again, took out the low. We've had a bounce, and I think if we pull a Fibonacci, this is old support, now become resistance. Now, it's a very common rule. It's a very common occurrence, I should say. It's not a rule. And it's a Fibonacci 38.2 level resistance, and the extension levels would be down here at 70 cents. Now, I believe that we could continue to get that follow through, but once again, not today, but tomorrow's morning, and I won't put out a video between now and then, we do have the interest rate decision from the RBNZ, but the interest rate's more than likely going to be kept on hold, but the minutes are going to be important. Now, if the minutes show that they're moving from a neutral tone to a dovish tone, well, then we will see this fall continue, and you can start adding on your positions that you potentially got on up here in your non-farm payroll result with your stop losses up here. You should be now moving them down and locking in a little bit of profit and keep scaling in positions and keep going in lower, especially if the data tomorrow continues to be weak. Now, the market could not do a lot between now and then, and might not take out that low until we get the data tomorrow. So the New Zealand could be a quiet trading pair tonight. We'll have to wait and see. The Australian dollar is just in a world of hurt. Now, if I zoom out a little bit, you'll see here we are at $1.07. And she just continues to slide and just really picked up some pace recently. And that's because they're cutting rates and the US is talking about raising rates. So there's that fundamental divergence. Now we're looking to take out some new lows here. Now this is going to be multi-year lows. If I go to the monthly chart, it hasn't been this low since 2009, very early 2009, possibly 2008. 2009, yep, so January 2009. Okay, so 6-year lows will be taken out and will continue. And then look, there's just no support. We haven't had any support since the GFC. And that opens up to some pretty large potential downside moves. And that's all going to come down to fundamentals once again. How far will the Australian government, or I should say the Reserve Bank, going to have to go to try and get the economy humming again like it was back in the boom of 2000s when we had our mining boom. Now, that could take many years and we could actually see prices hover around here for some time. This could be like a consolidation area. So we'll have to wait and see. Let's not get too carried away. Let's just look for trades for now. And we are seeing that it's testing out these lows right here. If I go to a 4-hourly, we've had a fall all day after some tweezer tops. So we had the non-farm payrolls. We had a bit of a relief rally yesterday, and then we've had some falls. If I go to a 1-hourly chart, as you can see, here we had a bit of a relief rally, and then she turned over and she's fallen ever since. But now it's starting to find support into the early European session. Now, it could do the same as what it did yesterday in the European session and have like a little bit of a base and then fall away again. And this could give you another opportunity to get an entry. And you'll be looking at old support levels potentially becoming resistance. You'll be pulling Fibonacci's from the low to the high and trying to find resistance levels. You'll also be able to trade breakouts of previous lows. So if the market went below there, so you might be able to get a swing entry, move your orders that you got in here potentially at the non-farm payroll, move the stop losses down here, so you're locking in profit, getting in some new orders here, moving the stop losses down to where the new order stop losses would be, and then start adding in some other scalping moves. That's how I do it anyway. It's just my personal opinion. I'm not giving you advice. But we could get that in the European session, and then early hours of the New York session, we could continue to see the US dollar strength kick in, and the market could make a charge towards the 76 range between now and tomorrow. Let's have a quick look at the US JAP. It's broken out of this triangle. We've been keeping an eye on it. This is the weekly chart. Let me go to a daily for you. And it just continues to grind higher. We're now testing old December 2014 highs. That will get taken out because of the fundamental, and we should continue to see it just peek its head above here, and then we might be due for a little bit of a pullback and a test of $122 and before we make our next move lower. But fundamentally, the US dollar is going strong and the Japanese economy is quite stagnant, as it's been for many, many years. So this breakout in this trade, we've been following it for some time. I'm sure my regular listeners will know all about it and potentially in this. And there's no reason to be worried that all of a sudden we're just going to get a tanking and all your positions are going to give back some profit that you potentially have made. Now, the CAD, we had a triangle that we've been speaking of. The non-farm payroll come up and tested that, and it looks like once you go down to some lower time frames, we poked our head above it, and we've had a pullback as the US dollar did during the European session yesterday, and then we found a base. Now, we found a base off levels that were historical resistance, as you'll see through here, and support. Now, that's a common area, and then we're making another run. Now, this pattern for me signals that this is going to be a breakout, and we are going to see some higher highs being formed on the US versus the CAD. Now, fundamentally, the Canadian economy isn't going crash hot either. However, it's going a little bit better than the Australian dollar and other commodity currencies. But nonetheless, I still think it's a trading opportunity, and I still think you could be potentially putting your stop losses under here and riding it higher. I think it will make a run for $1.27, and you'll be able to start moving your stop losses up, locking in profits, and adding to this and turning it into quite a profitable long-term trade. All right, I've spoken enough today. I'll be back again tomorrow. Trade well, and good luck out there.